The rand has slipped to a new 13-year low against the US dollar a short while ago, trading at 12 rand 23. Well, this as investors continue to chase the US currency. ETM analytics analyst Rob Price says domestic events are also putting pressure on the rand.
Emerging market currencies across the board are under pressure. The rand has not been spared. It has lost more than 7% in value since February. Tighter credit conditions in the US, together with rising interest rates, are seeing investors withdrawing funds from emerging markets back to developed markets, particularly the US. But domestic factors appear to be exerting more pressure on the rand.
There are domestic events that have taken place which has caused this event to be accentuated, and that's poor economic policy being conducted in South Africa over the last few years, on a monetary side and a fiscal side. So that's why the move's being accentuated even more on the rand than maybe some other emerging market currencies.
Yesterday's remarks by ratings agency Standard & Poor's were not enough to strengthen the rand. It says it's unlikely to downgrade South Africa's credit status in the next 2 years.
The government has managed to patch up a few of the concerns with regards to its fiscus. That's what we saw at the most recent budget. So because they've been able to patch that up through higher taxes, their deficit projections look a little bit more sustainable over the short term, and that'll delay any ratings actions for quite some time. Unfortunately, the actions that they've taken to create that little buffer domestically doesn't have a very good outlook for economic growth and ratings over the longer term. The outlook for taxes, for growth is still negative, and so that's why the outlook is still quite poor.
Price warns that a weaker rand doesn't bode well for inflation outlook. Inflation has been falling to the benefit of consumers.
A weaker rand means that positive impact is going to be negated. So fuel prices won't fall quite as much, and we're already seeing fuel prices now actually start to rise, particularly considering the Treasury made a decision to increase the fuel levy. So there's a significant impact on the man on the street in terms of the goods and services that he buys on a day-to-day basis.
And with the rand dropping in value against the dollar, investors are increasingly concerned about how capital inflows to South Africa will hold up once US monetary policy normalization starts. Diabo Sito, SABC News, Johannesburg.